But a warm welcome to you already if you are already logging in via the socials. I was just told that last week's live webinar here, we had something like 500,000 views on TikTok and something like 50,000 views, I think I was told, on Facebook. And so the magic of social media and social media gurus like Evie. So there we go. So if you have logged in, do say hi. There is a chat box. I don't know how it looks from your side, but do say hi in the chat. Depending on where you've logged in, your comments will get filtered through to the software, the streaming software that I'm viewing. So do say hello. Hopefully, I'll see some comments. Phew! I can see one. So that tells me it's all working. If anyone else is, well, there's plenty of people there, so I'm just waiting for comments to come through. So if you do want to say hi, that would be nice. I appreciate that there's a lag between someone being logged in on wherever they may be logged in through, YouTube, Facebook, whatever, to when those comments might come through. But anyway, I'm saying hello to you, so if we can get a couple more comments coming through, that would be nice, because it just means I know that everything's working. But I can see that it is anyway. Right, we are just on 2 o'clock, so I'm going to press record. Good afternoon and welcome to today's live trading analysis and event, again with myself, Charlie Burton, in conjunction with Tickmill. And the aim of these live webinars is to live analyze the markets. And we did that just last week. And so we'll do a little bit of a recap on what happened last week, and then we'll take things forwards to today. So the remit that I've been given is one, Tickmill very kindly given me a chunky $30,000 to go and play with in the markets. And this is real money, so the account is all plugged in to my trading view charts there, and I can spend it as I wish. But obviously, being a responsible trader, I'll just be trading it in a responsible way like we did last week. So I'm going to need to do a slight recap on that and look at the markets here over this next 50 minutes or so and see if there's anything going on. Okay, and I hope you're all very well, and for those of you who are watching the recordings of this, then you get to see whatever I've got up to in real time. So firstly, let's cast our minds back to last week. Can I just see, is anyone here today? Were you here at that webinar last week? Is anyone here who's logged in right now? Were you logged in? Were you there last week? Or did you see last week's webinar? I'll just see if there's any typing going on. I'll keep talking whilst we're waiting. Oh, one thing to note. Should have done this first. Risk warnings, risk disclaimers. So, yes, I'm Charlie Burton. I'm an independent money manager here in the UK. But any of the activity that I may get up to should not be deemed to be advice. It's not an offer for you to buy or sell. I'm just showing you what I am doing here with their money. Always makes it fun. Okay, I'm joking. It's a responsibility to be trading other people's money, just like from my own money manager perspective. Managing other people's monies, investors' monies, is of course a privilege, and it's also ethically something that's a big responsibility. Okay. So first off, we're going to go back to this pound dollar from last week. So I'm just going to put the pound into replay mode here, just on the daily chart first of all. So what happened last Tuesday? We did it last Tuesday morning. Do check out, if you haven't seen the recording, do check out that recording from last week, because you'll see what I did anyway. But what we analysed at that moment in time was that the pound On the daily chart, first of all, I've got this on the wrong charts, haven't I? Be useful if I actually had this on the right charts down here. So let's get down. Uh-oh. Right. Houston, I have a problem. Okay, there we go. Is it going to work? No? Oh, we've got all these different broker feeds. Right, okay, there we go. Ah, found it. Right. That's better. So, all these different broker feeds on TradingView. Right. So, last week, the pound had come up to those highs of 2024. September of 2024. The pound had come up at that point. And we know, therefore, it's an area of resistance or supply or whatever you want to call it. So we know that there's the potential for an early reaction when we first come up into a level like that. So there we were last Tuesday. That should be Tuesday's bar, I'm assuming. Yep. And we were looking at this early in the day. So let's actually take this back to, let's get rid of the replay mode now because we've subsequently sold off and come back up. So if we go back to the hourly charts at that point, and again, if I put it into replay mode, this is pretty much what we were looking at that point. You can go back, see that recording, and you can see what we were looking at that stage. So all I have on my charts is a few moving averages and, support, resistance, trend lines at times, of course, as well, and that makes up the bulk of it. So what we saw at that point was this divergence up here. So this is on an hourly chart now. So we knew that we were into a level of supply or resistance up at this zone because this was all coming in with those prior highs from September. Yes, I did, Evie, it is recording. Yeah. Hopefully, I've just seen your message there. And then on the hourly time frame, we had this divergence here on just what is a standard MACD indicator. We had a divergence whereby we've got two highs and actually a marginal new high here, and yet the indicator itself was massively diverging. Okay, fairly simple. So what we were looking at then was a sell opportunity. So I think I put an order to sell when we broke that low at the time, live in the market, and then we put an order. I was looking to close out. I believe it was somewhere around about 133. Now it didn't go to 133 in the space of that hour, of course. But we left it there, we put orders in, and then bit by bit, if I could take it forward, over the course of that day, I think it took into the following day, and then price got down there. So I've just put this back into replay mode for the purpose of this, but yeah, check out the recording and you can see all of that stuff. So okay, that's what happened last week. Okay, and when I approach the market, I always do a top-down approach. So although we were looking at it on an hourly time frame for a setup, it started with the higher time frames first of all. We're into a nice area of resistance going back to September of last year. And we've now got these divergences on we had a small double top here on the hourly chart with those divergences there. So it all came together, and it's not all going to happen that way every time you have an hour to go and look at the markets. We're going to have a look at the markets in a moment. I've got something for you, so we're going to have to move on, but I wanted to do that recap. So first of all, that's what happened there. Right, okay, that's enough of that. And that's the hourly chart, and this is where we're at now. Secondly, one thing that happened last week was that on the euro dollar, there we go, on the euro dollar, I put an order in to buy. You can see it here, it's still sat there. We have got a buy limit order with a stop down here as well. So the buy order is at 112.05 and a stop loss at 110.05, and actually the target is right up at 120. Okay, so that's more of a swing position trade, but that order is still resting, essentially still waiting to see if that gets filled at some point. Okay, that's it, just playing a waiting game on that. Okay, is there anything else to mention here? The main thing from a technical perspective is that you can see I use moving averages, and I find them a very graceful overlay in line with price. Yes, all they do is confirm what price is showing us itself, but it's a nice visual. It's a different visual to purely looking at price. I understand that everyone's different in trading, and we all have the things that we do like and the things that we don't want to use, and that's just the beauty of trading. So right from probably when I first started trading at the end in the late 1990s, one of the very first indicator that I ever picked up on was moving averages, and we didn't have all these elaborate things back then. So I still use them to this day. They're a graceful tool. Moving averages are an average of price, so they are price itself, and this is where people just don't even think about what conceptually a moving average is. And so it is an average of price. So it's really useful. Price likes to move away from its average price, for example, and then retrace back to its average price. When you start thinking about what a moving average is and all the things that price will do in relation to its average price, then there's lots of things you can do with moving averages. Okay, so overall, they're lined up quite nicely. So from a purely trend perspective, we've got my 20-day moving average. The blue one is up. The 50-day moving average here is up and pushing higher up through the 200. Okay, so I've got the 200 here. The 50's crossed through it, so creating a golden cross there. And the short-term moving average is obviously going to track price a lot more aggressively. So they're all nicely lined up stacked up on the daily charts there. So in a good position. Now that doesn't mean to say that price is just going to keep going higher without doing retracements. And right now, I think the euro is having a think about what it does want to do. So is it going to continue to consolidate here? Or is it going to push up from here? It doesn't really matter. The trend is to the upside. So until proven otherwise, and I was talking about this last week, the trend is to the upside. So until proven otherwise, I'm only interested in being on the long side. Overall, yes, there's always going to be short side opportunities, but until that trend breaks down, unless that trend breaks down, I'm going to be looking for long side opportunities. That's how I look to trade. Okay. So I've got orders there on the euro. Now, what's interesting on the euro right now is actually the hourly chart. So let's take us right way down now. We're just coming up to 2:15. And we do have some news coming out at the top of this hour. So at the end of this hour, we're only running for an hour, unfortunately, but there is some news coming out of the US, and that's those jobs openings. So the biggest news of the week is obviously this week economic news is going to be non-farm payrolls on Friday. We all know that. But, these JOLTS numbers, if there's a big miss or a big beat, will still produce a bit of movement. And we've also got the PCE data released tomorrow. The preferred inflation measure of the Fed is released tomorrow as well. So we've got some other news releases, plus anything else that comes out of Washington in relation to tariffs and all of that. But right now, this afternoon, we've got JOLTS numbers coming out, which could move FX around a little bit. I'm not expecting massive moves, but certainly the potential for moves is there. And there's a specific pattern that I now want to go through with you because there is something going on. Okay, what's interesting here at the moment is that for the euro, hi Jovan, nice to see you. Sorry, I've only just seen your comment, and you are watching through Facebook, I believe. So if anyone else is there watching through Facebook or any of the other social media channels, do say hi. I think they eventually get through to me on our streaming software. So what's interesting at the moment is, I'll tell you what we're going to do is firstly I'm going to take these moving averages off. So let's just hide these for now. We don't need them. I'll leave the 50 on. I'll leave the 50 period moving average on. See this low here, and then this low here, and then this low here, and this low here. Okay. All of those lows, when you get a cluster of lows, just like this pattern that we've got in place at the moment, when you get a cluster of lows close to one another, they are vulnerable. They're vulnerable to if price was to start rolling over. Now, that is, as we can see, the opposite of that is happening at the moment. But when you've got a news event coming, anything can change when you've got a news event coming. So in 45 minutes time, we'll see. But these lows are vulnerable. Even if the euro holds up through through this week, and we get to Friday and we're still in this vicinity, then they are vulnerable to a spike down. Okay, just to take those out. So if you think about it from a stop loss perspective, so if you think, okay, there will be a build up of stops from traders below those lows. It's not that the market is trying to come down and people get really caught up in, oh yeah, the market's going to deliberately come down and take those people out. I don't think about it in that way. It's just the mechanism of the market is to do what? Fill orders. It's not a conspiracy. The market does not care about retail traders' orders particularly, because we're all tiny in the grand scheme of things when it comes to these huge forex markets. So don't start to think it's a conspiracy in that regard. I know there's a lot of people out there that will try and have you believe that, but it's not true. So but don't get me wrong, it is true that the markets will try and fulfill orders. All I'm saying is it's not a conspiracy, it's just the market doing its job, which is to do that, if it's moving along and there's a load of orders, then it might gravitate towards it. It's not some mean demon sat in a room doing this saying, right, let's go and get them. It's not a conspiracy in that way. It's just orders. Right. And they don't always get filled either. And that's the thing. Nothing is 100%. So what I'm showing here is a pattern that I use quite regularly, or I see quite regularly, and it's useful to be aware of these sorts of patterns. You don't always have to trade a given pattern, but if you see it, if the market started to roll down this afternoon, you might then look at it and say, oh yeah, that's that pattern of just these marginal higher lows. The market may want to come, at some point it's going to, if price starts coming down to here, there's a good probability once it breaks down a little bit, that yeah, it'll come down for those lows. Okay. So the pattern, oops, clicked on the wrong button there. There we go. So the pattern itself is when you get a low followed by another low, which is just a little bit higher, just marginally higher, and then again, and then again. So usually about 3 or 4. So 3 or 4 in a series. I guess you could have 5 as well, But a minimum. What I'm trying to say is a minimum of 3 instances like that. Now, you might say, well, what if price starts breaking higher here? Because it's having a bit of a bounce here today, just in this past hour or so. What if price starts breaking higher? Well, the more that price moves away from this pattern down here, the less likely, obviously, that it's actually going to amount to anything. So we're not worried about that. What I'm interested in, looking at this pattern on an intraday basis, is if we start weakening off. So we need a trigger event. The trigger event could be those JOLTS numbers this afternoon. If we don't have the trigger event if it doesn't do anything on those numbers, and it may well not, and we just carry on floating around. I'll answer that in a minute, Erwin. You need to expand on what you mean when you say, how are the fundamentals looking? Can you just expand a bit more? Then I'll be able to answer that. So it may be that we just carry on trading and consolidating, and then we get into Friday. So it's now Friday, and price is still within shooting distance of these lows. And if that's the case, again, now we've got a bigger trigger event on Friday, non-farm payrolls, which normally produces bigger ranges. So it's not that we couldn't have a move down this afternoon, so keep your eye out for it. But we need a trigger event and obviously a trigger bit of price action. So we'll see. So even if price comes up here or continues to come up here this afternoon, unless the euro's a lot higher by Friday, it could well be that, well, we're still meandering overall, and then Friday afternoon comes and then we go and get a nice big breakdown bar. So this is what I would be looking for today. I'd suspect it's probably not going to happen now, but you never know. So first things first, what does price need to do? The reason I left my 50 period moving average on here is it's a good template to use for me. Not always, sometimes there's a given price level, but actually the 50 period moving average acts as a nice benchmark. So I would want to see price break down on a closing basis on a nice strong down bar on the hourly chart here below that 50 period moving average. All right, so that why would I want to sell it right now? Okay, Owen, I'll update you on all of that. So I wouldn't want to sell it here. There's not enough going on. But if we get a trigger bar, much like last week, I waited for a trigger. There was a trigger bar when I traded that double top on the pound. That's what I needed. So this is what I would need today if I was looking to trade. So it's miles off at the moment. And is it going to happen? Don't know. But that it doesn't matter. Take the pattern and keep your eye on it, because it may well be that the euro just carries on chopping around, and then we get to Friday, and then boom, non-farm payrolls, and you get a bit of a trigger bar. Okay, then there's very good odds that it's going to follow through and take those lows out. After that, it can do whatever it wants. So let's come down. Once it comes down, it might take those lows out. Oh yeah, it could then rotate all the way back up then, the following week or whatever, and we're back up. That's it. The pattern is done. It's just a disruption. It's to disrupt these lows, take them out. Now, it might be the beginning of a larger move down. Yeah. All I'm saying is the job is done. It's not like there's some major thing that has to happen once these lows are taken out. It's literally just a clear out. That's all it is. Okay. You've cleared your bedroom out. You've cleared your clothes, your cupboards out of your clothes. Oh, you've got rid of all of that stuff. Sent a load of stuff to charity. Done. Is that a good analogy? I don't think it is. So anyway, you're having a bit of a clear out there. So in spite of the euro sitting up here this afternoon, it could, just as quickly as it's bounced here this afternoon, roll back over. So I think it's one to watch out for short-term traders at some point, but it would need to be back down where? Below these lows here, which were right on the 50 period moving average on the hourly charts. So I'd need a strong closing down bar to make me interested in, okay, yeah, we're probably going to come down and sweep those lows now. It may not happen today. It might happen tomorrow. We've got that PCE report tomorrow. So again, all the time the euro's just floating around here, that pattern's still in play. If the euro over the coming days is right away back up into the 115s, then it's less likely that the market needs to come back down for these. Because ultimately, if we take this out to a daily chart, it's just a pullback at the moment. It's just a consolidation pullback over these past few sessions. And if it moves away to the upside, then, the pullback is, we're rotating away from the pullback. But all the time it's not, then it's a risk that the euro will want to come back down for 113, because it's 113.07 is the lowest point there, which is that spike there, 113. Let me just double check it. 113.08 on the chart here. So we'll keep our eye open for that. Right, let's come to some of the questions then. We've got some questions coming through, which I welcome. This is excellent. So we want to see some questions coming through here. One thing that I would recommend, we are running this live through social media here today. If anyone's watching this and you don't already have an account, I would encourage you to check out Tickmill. They are a great broker. I've been working with them for the last, I would say, 3 years now, and very keen spreads. Overnight charges are low, and just a great team of people as well. So I'd highly recommend checking them out. Okay, macro, that's very kind of you to say that. I think the thing is, so Macro said, Charlie's analysis is always good, or something like that. He's put a, where is it? Where's the camera? There. There we go, yeah. It's not, in trading, it's not about being right. I talk about this a lot. Yes, we need to be right a certain amount of the time, but trading is much more profitable. Trading is not about being right all of the time. I am not right all of the time, and no trader is right all of the time. So we have, the difference is a good trader is really good at sticking to their plan, and a not so good trader won't stick to their plan. So I'll stick to my plan no matter what's happening, and I won't be right all of the time. But if I keep doing the same things and I keep following my plan and my process, then of course I only need to be right a certain amount of the time in order to be profitable in the market. And I think that's the main thing to get across. Over and over, repeat the process. Stick to the plan. I had some feedback from a group of traders recently, and the overwhelming problem that they had with their own personal trading was essentially that they couldn't stick to their own plan. So what I mean by that is they'd bank their profits too soon, move their stops up too soon, all the age-old things. Nothing ever changes, but essentially they're not sticking to their plan, and that seems to be the overriding common theme. Right, just bear with me a second here. I'm getting messages coming through that I'm not seeing. Tickmill's social media guru, I think, has messaged. Oh no, that's okay. It's an old. I think that's an old message. Hopefully, yeah, that is good. We are all good. So yeah, it's just one of those things, isn't it? It's human nature. People want to be right as much as possible, and they'll do the things that they can in order to be right. Right, I'm getting sent messages from Evie. I think Evie, we're okay. Yeah, I think. Yep, no, we're all good. Yeah, we're all good. We're all good. So it's that desire to be right as much as possible. So the biggest advice I can give is stick to your plan, whatever your plan is. Yeah, stick to your process, stick to your plan, and don't tinker with it. Easier said than done, I know, but that's the goal. You should you should aim to be. Your goal as a trader should not be about, I need to be profitable on every trade. Your goal as a trader should be to get really good at following your plan. That's it. And if you get really good at following your plan, through thick or thin, ultimately you'll be a better trader. That's it. Right, let's move on. Okay. Erwin, rephrase. Oh yes, this is about the fundamentals. What's the word? Right. What are the latest news on tariffs regarding the EU-USA relations? Well, I think that most relations are probably a little bit strained at the moment, Erwin. Okay. So Erwin's saying he's already got a Tickmill account, and very happy with it. That's good to hear. And you've been with them for years. Excellent. It's good to hear. So it's when we're talking about relations, I think relations are going to be a bit strained because economic blocks, economies. Same. I'm here in the UK. Are all scrabbling around to try and negotiate deals with the US. So whilst that's all going on, there's a lot of uncertainty, and so when you're saying about the relations there between the EU and the USA, then I would say that they're probably desperately trying to sort these deals out, much like they are in the UK, India, all over the place. So as it stands, I'm not sure on where the EU and the US are in their trade negotiations, and it's a bit like with the UK. What we keep hearing is, talks are progressing, but we're not there yet. So, and I think that's the main thing. The overriding thing, in my view, Erwin, is that it would appear, unless there's a major change from Trump, that most economies, it would appear at this stage, from his language and his top team, is that there are still going to be tariffs. Yeah. Now maybe those tariffs are going to end up being smaller than was originally stated, but there's still going to be tariffs. So the way that I'm looking at it is that there's still going to be a drag on the respective economies. That's it. So if you're going to have trade tariffs, then there is a cost to that. There's a cost in a change of demand from consumers, and as a result, a change in producers' exports and and their activities. So, and there'll be a drag on the US to some degree or another on their economy, and also elsewhere with their trading partners. Now, I suspect a lot of these tariff negotiations are going to be such that the negotiations will bring those tariffs down, but one thing none of us really know is to what extent do those tariffs come down. So, the way that I'm looking at this, and this is a personal view, is that the US has been the dominant economy, as we know. That's where the exceptionalism trade has been. Invest into US stock markets, they way overperform the rest of the world. The companies there are still very good, so nothing changes there. Having said that, international investors and economies, are they going to hold as much of their assets in the US as they previously did? I suspect not. So I suspect that will, over the medium term, act as a drag on the US dollar. Okay, so that's how I'm seeing it over the medium term. Now, what happens on a day-to-day, even a week-to-week basis, who knows? The dollar will strengthen at times on some positive news, and then it'll go back to weakening again. So this is a medium term. When I say medium term, I'm talking over the next year, 2 years. So, medium to long term, acting as maybe a repricing of the US dollar, as all of these, on the back of all these deals, tariffs, negotiations. So I suspect that's what will happen over the medium term. So as economies, just a bit, everyone's still going to want to invest in the US because the companies are still got great companies and all of that. However, it wouldn't surprise me if there's just a little bit in relative terms of diversification, and just a little bit of diversification can have a slightly larger impact on certain things, such as the US dollar, as monies are then spent elsewhere, so to speak. Not completely, just a bit. It would still act as a drag overall on the dollar. I think that that's ultimately what the US government want anyway, a slightly weaker dollar over the medium term. So yeah, that playbook is the playbook that I'm looking at overall. Now, that doesn't mean to say, if I bring the euro dollar back to a daily time frame here, that does not mean to say that the euro dollar doesn't come down. In fact, just last week, I put that order in to buy if it does come down. Because I'm looking at this on the daily chart, and then if it pulls back, well, that's what we want to do, isn't it? We want to buy pullbacks within trends, within the context of trends. So there's always going to be pullbacks in the context of trends, but yeah. So that's my view. Someone else's view might be completely different, but I'm just putting out a view there in relation to that question. Okay. Jimmy, why these riders in four-wheelers are speeding? Nobody is learning lesson. I don't know what that means. I'll have to move on, Jimmy. I don't know what you're talking about. Sorry. I don't know what that's in relation to. Maybe this is something that's been in the news today. I don't know. Okay. There are some comments coming in. Thank you very much, Vito, from Brazil. The problem is I cannot read Brazilian. and there is also someone else. It looks like they've been writing in Arabic there, and so unfortunately I can't read that either. Okay. I've just got a translation here. That's handy. US dollar goes up before the news. I don't think it will be good. Euro rises against US dollar. Thank you. Okay, yeah. I don't know in what context you mean there. US dollar goes up before the news. Which news? I don't know. But you think the euro will rise against the dollar. I don't know if that's just on the day today, what veto means. So I've been talking big picture there for a while there. Okay. Good. Okay, Erwin. Right, I've answered your question. That's good. How are we doing for time? We are doing pretty well for time. So last week, and this is the thing, when we do these live analysis sessions, and I'll go into a bit more analysis now, but sometimes, like last week, it was just perfect timing to do that trade on the pound dollar. This week, the timing isn't there. I don't have a particular trade setup, not during this hour that we're doing the broadcast. So what I'm trying to say is, though, is if the euro rolled over this afternoon and closed below those lows at some point on the hourly chart, okay, then that opens the door for the euro to come back, and as I was saying earlier on, to take that pattern out. All these slightly higher lows, then the scope is there. I'm not saying I'm looking for that as such. This afternoon, is that going to happen? It could, but I'm just saying to look out for that if price got down below there on a closing basis. So that's how I'd look at that. Otherwise, yeah, we could just carry on floating higher. I'm quite open to that as well. But I think that this pattern, as I keep saying earlier, but I have to repeat because there's more people in now than there was earlier, that even if it doesn't happen today, if the euro just carries on chopping around this week, then at some point it might still want to come down to take those lows out. So that's the key lesson, if you will, from this week's webinar. Last week it was about that double top divergence. This week it's a different pattern, a subtle pattern of these marginal higher lows. And when you get that, and you still have to wait for price to start rolling over, but if that happens somewhere over here, then the odds start to really build that we do take those out. Okay, so about to 113 roughly there for the euro. Now, if I come back to the bigger picture, the daily time frame, the euro's not saying so much to us at the moment. In that overall, we've had a great run in the euro since really, I would say, early March, when after the German elections. It's run from what we'll call it 104, let's call it 105, and we've been to 115. So it's done 1,000 pips on the upside. Having said that, the average range for the euro on any one given year is about 1,500 pips range. So far this year, the euro has done, I think it's about, I'll just have a look here, 1,400 pips. Okay, so, or 1,396 to be exact. So its average range is over 1,500 pips, and so far we've done 1,396. We're about 100 pips short of doing its average annual range, and we're only just coming into May. So it just gives us a sense of just how volatile and the bigger moves that we've seen this year. Now, that doesn't mean to say that 1550 pips average range. How am I doing for time? I'm having to check here. It doesn't mean that if the euro goes up there and reaches that 1500 pip average that it has to stop. It's just an average. There are years when the euro does 2000 pips in a year, and there are years when it does 800 pips in a year. That's the long-term average there. So, but it's nice to keep it at the back of your mind, just to say, okay, we still haven't even got to our average yet. And the last 2 years, it averaged 880 pips in 2023, and I think it was about 1100 pips in 24. So the ranges were definitely lower the last 2 years. So I would like to think the euro at some point this year will, as a minimum, get to that 1500 odd pip range. So overall, it's a good trend to the upside. Likewise with the pound, it's a good trend to the upside. They are allowed to do pullbacks, consolidations, retracements, whatever you want to call them, but unless they materially roll over, the trend is in play. And so we have to assume that the trend is to the upside. So we assume that that's where prices will continue to go until it stops. Of course, all trends come to an end, and the problem with most traders is they're constantly trying to find that end rather than trading the trend itself. So even if the pound here against the US dollar pulls back over the next week or so if it does pull back, it's still overall within a trend. And from a swing perspective, now intraday trading, you do whatever you like. You trade on either side, really. But from a position perspective, I would still be looking at this as, okay, that's the trend. So that's the overall direction that I want to be trading in. Okay. Any more questions at this stage? So it's fairly simple here today. Nice, we've got a little pattern there on the euro. I'll take us back to it because I think the euro's just having a think again on that hourly chart. Yeah, so you never know. That pattern may still come back into play this afternoon. The euro's only got to start working its way down. Maybe we get a good jobs number out of the job openings here this afternoon, and then we close. It has to close down. Well, if that happens, then we start coming down for that low. I'm not saying we have to come all the way down for that low this afternoon. It may still take until tomorrow to do it, but that's the scope is going to be there. If the euro lifts today, this afternoon, it pushes back to the upside, fine. But unless the euro materially pushes higher and extends away from these, so unless it really starts to push away, then it's going to be vulnerable to wanting to come back and taking that pattern out at some point this week. That's it. Simple, isn't it? You got a plan. I've got a plan. I don't need to trade this because in the main, I don't spend most of my time intraday trading, but I can see what can happen. I'm still looking for the euro to see if the euro is going to pull back anyway on the daily charts to see if that order that we put in last week at 112 area gets filled. So I'm still waiting to see if that gets filled next week. But that's pretty much it today. So any further questions at this stage? We are just coming up to 10 to the hour. As we can't be here for the news itself, because that's then taken us into the new hour, so I can't be here for that. Unfortunately, today these webinars are scheduled to be less than an hour, but at least you know what I'm looking at and keeping an eye on here today. But yeah, last week it was that short on the hourly time frame on the pound. This week, no brand new trade per se, but I'm keeping my eye open on the euro. Doesn't have to come down today. I don't care. But at least if it does roll over or start, rolling over this week, I know what it's trying to do, and that's all that I need to do. So, okay, well, it looks like I can't see any other questions coming through, so I won't take any more of your time. I do hope this session has been of use to you. Do check out Tickmill if you don't currently trade with them, because just get a demo account. Just at least give them a try, because they are very, very good. And like I said, I've been dealing with Tickmill for the last 3 years. So I do hope you've enjoyed this session here today. We'll be back soon enough doing another live analysis webinar. And as always, I'll be putting orders out there like I've got at the moment, or looking for patterns that could trigger in the very near future. So I do hope that's been of use to you, and I look forward to seeing you soon.